What is going on, YouTube? And welcome back to the Clear Cryptos educational channel. My name is T Hobbs, and of course, I got my man Jay Seals with me. What's going on, brother?
What's good, everybody?
Ladies and gentlemen, the SEC is in straight up roundup mode, just roundup mode. Everywhere you look, every time you turn on the TV, all you hear is crypto, 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 bad, 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 bad. And they're starting to indict. They're starting, not indict, but they're starting to inquire between YouTubers, between, Coinbase inquiries, between everywhere you look. It's just bad news. So, we decided to go over a little story, kind of summarizing everything in regards to what the SEC has been up to. We're going to tell you our thoughts on how we feel about the SEC. So, Justin, take us away.
Yeah, man. So the SEC is issuing investor alert urging caution around crypto. Silly SEC. So the SEC has issued that we should be cautious with crypto. Specifically, the regulator has cited digital assets that may not comply with various U.S. laws and called for investors to carefully consider their entry, like they haven't met a degen or like they're not degens themselves. Yeah, all right. The news follows several lawsuits from the regulators, including Tron founder Justin Sun and various celebrity endorsees. Because if you haven't heard, they've been coming after a lot of people in crypto. But does that really make crypto that bad, though? Like, they don't come after people in the stock market, too? The official alert speaks on the speculative and volatile nature of the market, because all markets aren't speculative or volatile. Okay. It also informs a recent action taken against the industry as a whole. Following a string of enforcement actions taken against various companies, the SEC has issued the alert, urging caution around crypto. Specifically, the official release from regulatory agency has warned potential investors of dangers. They said investments in crypto asset securities can be exceptionally volatile and speculative. The platforms where investors buy, sell, borrow, or lend these securities may lack important protection for the investors. Well, that may be partially true if you're, being in the world of CeFi, but here in DeFi land where, most of us reside, we got to worry about it because we own our crypto, because we know that if it's not your keys, it's not your crypto. Sorry, SEC. I mean, you might have to learn that one. So additionally, the alert noted the risk of loss for individual investors. Again, any investors at risk of loss when you're investing. That's just how the world works. The only money you should put at risk with any speculative investment is money you can afford to lose entirely. Jesus Christ, this is like investment 101. What are you doing, SEC? We know all these rules and we preach them all the time. So they also say they may not comply with applicable law, including federal securities laws. And I mean, yeah, the SEC hasn't quite stated what those laws are going to be. So you can't really say that. But they say that retail investors are going into scams and often leading to devastating losses. However, literally at the same time, you say, well, you should put at risk only what you're afford to lose. And I mean, that's like, again, investment 101. So Hobbs, what do you think about the SEC basically trying to pick on crypto for, things that they should be picking on, just regular investments for, honestly?
Well, a couple stats for you. Last year, at the end of the year, when we rolled into this quote unquote bear market, the definition of a bear market is when the S&P is down at least 20%. Well, we were down 20%, and that's basically the overall market. There were some projects, to name a few: Tesla, Apple, Nvidia, Google, Amazon. You name them. We'll call them the big six, is what I like to call them, right? Microsoft, down 60 to 70%. Guys, the conditions of the market can cause an asset to go down at any point in time, right? Anything you put your money in as an investor, you should do your own research and know that it's speculative. Crypto is, yes, much more speculative because it's new. But the idea that crypto should be treated as a different type of risk when they don't even put all of these restrictions when you go to Vegas or when you put your money in the stock market, it's crazy to me. What they're trying to do is fearmonger crypto investors into believing, or people who don't understand crypto fully, into believing it's a bad thing. Meanwhile, you have people like the NASDAQ, Fidelity, BlackRock, Citadel that are investing very heavily and providing crypto to their customers year to date. Those people will get the better prices. They'll hold on to it longer. And then they'll find you chasing your tail when they start allowing crypto on commercials, such as the Super Bowl, where they took it off this year. But in the next 3 to 4 years, it'll be repetitive everywhere you look, like cigarettes and beer. You'll see cigarettes, beer, and then crypto, right? Soon it will be completely fine to invest in crypto. Get as much of it as you like, because then the government will have their hands in it. So don't wait until the government scares you out of your position to make it their position. Get your position now and make your money now. That being said, we love to know what you guys think in the comments down below. Please don't forget to like and subscribe to the video and the channel. Come back and see myself and Justin on the Clear Cryptos educational channel, and we'll catch you guys on the next one, man. Peace.